Hello everyone, CB3 here with another live update. It is Wednesday, October 2nd, and this is the monthly review for September and the preview for October. There's a lot to talk about. Stay with us. CB3 Live Update starts now. If you folks are following my weekly podcast, you know that I talk about September as being the worst performing month for the stock market of the 12 months. But October is right behind it, and although it's not as poor in performance, it definitely is the most volatile. We've had the stock market crash of 1987, 2008. There have been some very, very tumultuous times in the month of October. So which would you rather have? Poor performance or volatility? Well, you don't really get a choice. We have to live through September and October every year. We made it through September. September actually started off a little like August. Stocks sold off quickly in the first few days of the month, and then they rebounded aggressively, which is unusual for September. All right, but that's becoming a pattern. So October has had the first two trading days start off in a downward move and then rocketed back to the upside, making new highs. This is the kind of volatility we're going to expect in October. And on top of that, you have the presidential campaign, the vice presidential debate, which just happened last night, which seems like it's given the Trump campaign a little bit of strength here. Maybe, maybe not, but that's the way that I heard it. I'd be interested to know what you guys think if you want to tell me. And obviously, Israel is promising to retaliate against Iran for the latest missile strikes. Well, let's face it, they're both just dropping missiles on each other, and in the end, this is not going to work out well for Iran. And this is going to keep going on and on and on until one side just says, forget it, we're not going to keep doing this. That's been the pattern in the Middle East, and I don't see that changing. So what was the big news of September? The Federal Reserve's meeting where they cut rates by 0.5%, 50 basis points, when many of the expectations were for 25 basis points. I think that probably somebody knew about this because the market made a huge move up right on the heels of that and then sold off the next day or so. But now you're seeing underlying strength. Whenever the market sells off for, say, 1.5%, 2%, the buyers come in, and it doesn't take long. So I'm not a Fed expert, but you know from listening to my show that I follow them pretty closely. And I think that I've learned the hard way to fight the Fed is a huge mistake. I'm not going to fight the Fed. We're staying 100% invested in all our programs unless something changes in the fundamental picture of what we're doing here, okay? Gold and silver keep going up, so that's an inflation hedge. That means the dollar should be weaker, but actually the dollar is stronger versus foreign currencies. I just went on a sell today in the British pound. I went on a sell yesterday in the euro. So the dollar is strong and gold and silver are strong. It's a really wacky time. The bottom line here, lesson from September is don't fight the Fed. The stock market concluded September on a strong note, defying the typical seasonal weakness, which I've been telling you for the last couple of weeks here, but I thought was going to happen and did play out. The Dow was up just marginally, the NASDAQ rose about 0.5%, and the S&P almost 0.5% itself. But what this means is that September contributed rather than detracted from the third quarter performance. For the third quarter, S&P 500 up 5.5%, NASDAQ up 2.5%, Dow up 8+. So that's unusual. The Dow is not usually outperforming the NASDAQ and the S&P. So what were the drivers for this performance in September? Increased investor confidence in the Fed's ability to achieve a soft landing. Soft landing means that we're going to be able to not go into a recession and just little bit by little bit ratchet back the interest rates, and GDP continues to rise, and we don't have any inflation increase in the process. That's the point of a soft landing. This was the first rate cut by the Fed in over 4 years. That's a big deal. And 50 basis points is a nice start. Many people think we're going to see another 50 basis points later this month. China is unveiling new stimulus measures, and that just kicked the Chinese stock market into overdrive. Some of us trade Chinese stocks, and we have definitely seen an increase in that. We're going to be doing more of these foreign markets in 2025. I'll be telling you more about that as we move forward. But sector performance, real estate almost up 1%, healthcare up 0.75%, energy up 0.75%, and the only sector to lose was the materials sector, okay, one of the smallest ones. So it was a really good September considering that historically it's the worst of the year. All right, so if we look ahead to October now, what are we going to see? Well, obviously, this is the last full month before the presidential election. And in fact, just in a month and 3 days, we're all heading to the polls, or if you've already voted via mail or however you do it. I don't really think that there's going to be much surprise here because I would say 99% of the country's already made up its mind. I don't know why we have to have such a long election cycle, especially now with modern technology. It just doesn't make sense to have this long election cycle, but that's just my opinion. So, earnings season, the final earnings season of 2024 gets kicked off here. Major banks reporting on October 11. Remember, they're going to report on the third quarter earnings now that we're in the fourth quarter, and then as we turn the new year, then we look back at the fourth quarter and talk about those earnings. So key economic data, obviously this Friday, tomorrow, is when we're going to see the non-farms payroll. That'll be the last payroll report before the election. So if there's a big surprise there, it could influence voters a little bit, probably not. And so the Federal Reserve plays a part this week because the FOMC minutes will be released on October 9th, providing insight into their thinking. So what gave them the impetus to cut 50 basis points instead of 25? If that looks scary, in other words, we did it because we were concerned that we're going to head towards a recession, then the market's not going to like that. But those minutes will be released October 9th. October does have this reputation for volatility, but it's historically been stronger than the average of all U.S. stocks. And that's because it finishes the last 6 days of the month. If you look historically, the last 6 days of October can be pretty strong. Obviously, it'd be great this year, probably for Kamala Harris, because then she could lean on that in the last few days of the campaign and say, see, the market thinks I'm going to win, and you should be voting for me too. So obviously, the ongoing geopolitical tensions are going to coexist with everything here. This tit for tat between Iran and Israel and Hezbollah, we can't escape this. And it's just going to be part of the fabric that we have to deal with as investors. So there it is. That's the look back at September. That's the look ahead to October. Of course, my show is a week from tonight. Don't miss that. That's Thursday, October 10th. That will be the last show before we have a new president-elect. Thank you guys for listening. Send your questions in. We have changed the format. I think as you see on the monthly newsletter, we're going to the audio format because people have given us feedback that they prefer to sit and listen to this on their phone, in their car, wherever they are, rather than having another email to read. So we're still sending you the email, as you can see, but it's just got a minimal amount of the performance charts that you guys want to see for how the programs are doing. But then I talk to you just like I've done today. So thanks for listening. We will see you next time. God bless out there and take care.